non-QM products that we offer here at Cross Country Mortgage. Now, non-QM, what that is non-qualified mortgage. So a qualified mortgage is a legal designation for a loan when it provides a legal protection for a lender in case that loan were to go into default and then that borrower on that loan came back and sued the lender for malpractice on originating the loan. So it's this legal protection that's there for lenders if they originate loans that meet a certain set of guidelines and parameters. So I'm not going to go through all those parameters today, but there's 10 parameters that qualify a mortgage as a qualified mortgage, and then anything that doesn't meet those parameters is considered a non-qualified mortgage. So if it's a non-qualified mortgage, then the lender is maintaining some responsibility for the performance on that loan and making sure that they've underwritten it properly so that the buyer is qualified and can afford the loan. So lenders always have to meet a law called the ability to repay rule, ATR, and ATR applies for qualified mortgages and non-qualified mortgages. So all of your standard FHA, VA, conventional loans, even most jumbo loans, which are called non-conforming loans, those are all qualified mortgages. There's also this suite of products called non-qualified mortgages that allow for expanded underwriting parameters outside of the box of what you normally see on a standard mortgage, and it can help people get into a home in situations where they might not be able to. So I want to go through a few of the products that we offer here at Cross Country. One of the things that's really unique with Cross Country is these are products that we underwrite in-house, and we handle the whole process from start to finish. There's a lot of mortgage companies that they have these products as something that they can offer, but then they've got to outsource it or broker it to another bank who then does the processing, underwriting, disclosures, all of that. And so we handle all of that in-house, which allows us to control the process and provide a really good experience for our clients and referral partners from start to finish. So the first non-QM product is a bank statement program that we have. So a bank statement program, instead of qualifying someone based on their taxable income or even non-taxable income sources like retirement or Social Security, that would be what we would do with a standard qualified mortgage. With a bank statement program, we can look at 12 to 24 months of deposit history going into a personal or business bank statement or a combination thereof. And then we're using those deposits to calculate a qualifying source of income. And so the type of applicant that this would fit really well for is a applicant who is self-employed and who has a lot of write-offs. That's typically the person that's going to really be best suited for this program. And so a lot of business owners, they have revenue coming in, but they've got a lot of taxes they might be deducting on their bank statements or on their tax returns. And they want to shield themselves from tax liability, which is one of the biggest advantages of being a business owner. So they are going to use every write-off that they can, but what that does is it reduces their taxable income that they're paying tax on to the IRS. But on a standard qualified mortgage, we're looking at taxable income for qualifying purposes. So a lot of times business owners run into a problem qualifying for a standard mortgage if they have a lot of write-offs. A bank statement program will allow us to qualify that business owner based on deposits going in their bank statements, and we're not getting into all the write-offs that they have and looking at their tax returns and what their taxable income is.